The major stock index is trading lower Friday after Fed official James Bullard said inflation was stronger than expected. Let's get the implications of that for your portfolio, and for that we're joined by Ken Kamen of Mercadian Asset Management, joining us from Yardley, Pennsylvania. Welcome back and happy Friday to you, Ken.
To you as well.
Well, Ken, in light of what Bullard said and the Fed's commentary on Wednesday, in which they pulled forward their forecast for rate hikes, why is the inflation trade? I'm looking specifically, for example, at financials, material stocks trading sharply lower today, and tech doing relatively better, albeit lower.
Well, I mean, the whole kind of reflation trade, as you call it, is one of those kind of things that everyone knew was coming. There's eventually the Fed is going to have to say that they're starting to think about raising rates. So I don't think any of that's a surprise. I think maybe people had been positioned to it maybe happening a little bit later in the year. So now what we're starting to see is a bit of an unwinding of some positions that have been put on. I mean, we're getting a bit of a flattening of the yield curve at the moment, but that makes some sense as the short-term 2-year moves up in anticipation of potentially higher rates sooner, but the long run, the 10 years is not really moving or coming down a bit, because that kind of means that we're going to see slowing growth later on. So those two things are battling against each other, and that's kind of somewhat affected the financials. If growth is going to slow in the future, is the economic dogma that goes around this. I don't think that really applies. So I actually think that the market is kind of getting it wrong here, in that we're having a lot of economic activity going to happen still from the reopening trade. We're still getting a global spreading of vaccine. There's a whole bunch of things to rethink that we're going to have an economy that's not going to be slowing down over the next year or two, as traditionally would have been thought of when we have this. So I just think we're getting a lot of repositioning around something that should not be a surprise to anybody.
Then, given your views, should investors be buying cyclicals on this dip?
Yeah, I actually think that the market looks pretty good here. I mean, I'm kind of buoyed by the fact that we've been chopping around, kind of flatlining it, if you will, in a trading range over the last month or so. That's kind of good that we're kind of consolidating these profits here. Now, the way to keep yourself mentally sane as an investor is to always be expecting a 10% dip in the market, because it could happen at any time. But with that said, I think the second quarter numbers are really going to look good. There's no reason to think that we're not going to see continued growth, not only here, but in abroad and emerging markets, and kind of almost a global reflation as inoculations spread around the globe. So I think actually economics look pretty darn good around now. It's almost like a Goldilocks scenario.
Well, Ken, we've seen the dollar rising, the dollar index rising yet again today after the Fed's commentary on Wednesday. Commodities have been falling as a result. Should investors buy commodities on this dip?
Well, the commodity thing is kind of interesting. That's a harder one to call. I mean, you just had China say that they're going to be releasing some strategic stockpiles here. Now, whether that means they think commodity prices are too high, or they need to get commodity prices lower because they're basically a manufacturing and exporting country, and their inputs are more money as commodity prices go up. There's a whole bunch of kind of noise out there now in the commodity market, but not least of which is we've seen such a huge rise up in commodities over the last 3 to 4 months on the reflation trade, as we've been hearing about the imbalances of manufacturing. You know, I needed a fence repaired at my house, and they couldn't even get the lumber for me, let alone I was willing to pay more for it. So I think that is noise that played into the commodity markets that's now starting to come off a little bit and being exacerbated by China's move here. So it's really a hard thing to call, but I think demand is going to start leveling out, not spike as much. So I think commodities is probably going to do what the market did, which is settle into a trading range now, probably for the rest of the summer.
So the big, huge spike up maybe settling down. All right. Thank you, Ken, for your thoughts.
Thank you.
Our thanks to Ken Kamen of Mercadian Asset Management. I'm Fred Katayama in New York. This is Reuters. Have a wonderful weekend.